We don't seem to be any closer to a resolution on the fiscal cliff, even though many are warning that the economy could face dire consequences if there's no agreement. But one strategist says, why are you worrying about December 31st? That deadline? That isn't even the real fiscal cliff.
That strategist is none other than Peter Schiff, CEO of Euro-Pacific Precious Metals, good friend of the show here, and we're glad to see him again. Peter, although I wish he was under better circumstances. Now, you say the real cliff that's coming is going to be bigger than the housing mess, bigger than the financial crisis that we went through. It's the bond mess. And specifically, when the Fed stops printing money to buy up treasuries, all hell's going to break loose, right?
Well, and if it continues to print money, it's going to be a bigger hell. You know, if we avoid the fiscal cliff, we end up throwing the dollar over the currency cliff because we send a message to the world that America will never pay its bills. We're just going to keep borrowing money until our creditors cut us off. And that's when interest rates skyrocket and the pressure is on the Fed, because if the Fed caves into the political pressure to buy up all those bonds that nobody wants, then we destroy the dollar. And that's an even bigger crisis than if we just let the bond market collapse and let it take the economy with it.
Okay, let's not start so macro. We're throwing out this term, the bond market. A lot of our viewers own treasuries. What specifically are you talking about? The entire yield curve?
Well, the government is borrowing over $1 trillion a year right now. And I put borrowing in quotes because borrowing implies that you're going to pay it back. We will never pay it back. We can't pay it back. That's why we have to raise the debt ceiling, because we can't pay our bills. We got to borrow more money from the same people who loaned us the money in the first place. It's a giant Ponzi scheme.
Okay, so what would cause the back to break of this scheme that you call it?
Well, as creditors don't want to buy treasuries, and the only buyer left is the Federal Reserve. I mean, you still have foreign central banks, but they're going to back away. So if the Fed is the only buyer, it has to print an enormous amount of dollars to buy up all the maturing bonds and all the new bonds. And that sends the dollar collapsing and prices skyrocket. And then the Fed can't maintain the pretense that there's no inflation because prices are rising, is faster than you can see them. And then all of a sudden the Fed has to do something. It can't just sit there and tolerate the inflation. But if it does anything, if it raises interest rates, then it causes a bigger financial collapse than 2008.
Hey, Peter, let's talk about how we measure things. It might sound like a theoretical discussion, but it's very real and practical. If you're looking at your 401k or your portfolio, you look at the S&P, for example, and how that did last year, and you think, geez, that's pretty good. It's up double digits. That's how I measure value, by the dollar amount. But you say that's a bad way to measure the value of what you have. You should measure it relative to the price of gold. And by the price of gold, the S&P hasn't done as well, right?
Right, or something objective, something of, look, they just raised
the way,
fare
hold on a second, Peter, hold on. What we're seeing now, that blue line is how the S&P has done. If you measure the S&P in the value of gold, the yellow line in dollars, and as you can see, the gold value is not as good. Go ahead, Peter.
Well, it's horrible. I don't know how long the chart is. I can't see it. But if it goes back 12 years, you can see what a disaster.
It's just a year.
But I mentioned... Yeah, they just announced they're going to raise the price of a subway ride or bus ride to $2.50. How's the Dow doing in terms of that? I mean, I remember when I lived in the city when I was there, I was paying 50 cents to ride the bus and 25 cents on Sundays. So that's a huge increase.
By the way, $13. I just went to Pennsylvania over the weekend from New York. $13 in the Lincoln Tunnel to get back into New York. $13 now. The price of government is going way up.
Try going from New Jersey to New York every day. Okay, poor now, but let's just put it this way, Peter. You talk about a dollar crash. People, look, is that a really fair assessment to call it a crash? You really expect that?
Well, it hasn't crashed yet. It's gone down. I mean, people forget the history of the dollar. But when Nixon took us off the gold...
A little stronger today against the euro. I know we don't go day by day, but, every time it seems to fall, it rises again.
Well, my point is, in 1971, when we went off the gold standard, in the next 7 or 8 years, the dollar lost 2/3 of its value. That's why oil prices went from $3 to $30. That's why we had all the inflation in the 1970s. And I think the decline that's coming for the dollar is going to be much bigger than what we saw in the 1970s. The fundamentals are much worse. Meanwhile, over the last 5 years, 10 years, the dollar has been going down. Pick up a chart.
Okay.
The Australian dollar, you need $1.05 to buy an Australian dollar. You used to be able to buy them for 50 cents not too long ago.
Yeah, you're not.
So the dollar is going down. You can't just look at the euro. They're having problems there too. But you know what? The dollar is also going down against the euro.
Okay. Well, we'll be watching this and very closely, as Peter Schiff says, watch out for. Hey, Peter, you can go fly fishing with Paul Volcker. What would you ask him if you bid on that for the RFK auction?
I don't know. I mean, I'm still disgusted over the $3 million that guy made working at that college in New York City. I like to raise his taxes.
Yeah, absolutely. Well, a lot of those guys don't pay anything. All right, Peter Schiff.
Yeah.
I guess
they don't work either.
Thanks.
They're like no-show jobs.
Before I shoot myself, I'm going to have to say goodbye to you. Peter Schiff, Euro Pacific Capital. Thank you, Peter. But did you ever want to know?